Hello, friends. In this video, I will be presenting a simple four-step Gold IRA plan. I'm going to make the assumption that you've already decided to open a Gold IRA account. The only question is, how do you go about doing that? So let me share my screen here and we will get started. So here it is, Gold IRA plan. That's what we're going to talk about today. 4 steps. So first step is deciding what percentage of your investment portfolio do you want to put into gold, physical gold, and the other precious metals. Step 2 is choosing a reputable Gold IRA company. There are lots of companies to choose from. It's important to pick a good one. And then funding the Gold IRA account, that's step 3. And you've got a couple of choices there. And then step 4 is picking which precious metals products do you put into your Gold IRA account. And step 4, in my opinion, is the most critical. And this is where many Gold IRA investors make a mistake that costs them serious money. So let's keep rolling here. So step 1. How much gold should you own? And of course, that's a personal decision. I'm not a financial advisor. I'm not an investment advisor. I can't give you financial advice, investment advice. Only you can decide how much gold is appropriate for your personal circumstances and your tolerance for risk. If you go out onto the web and poke around looking for advice or suggestions answering this question, how much gold should you own? What you will see most commonly is 1 to 10%. That's most advisors, most of what you'll find. Some will say 6, some will say 7, but it's mostly in the range of 1 to 10%. You'll find, if you dig a little bit deeper, you'll find some computer portfolio models, and typically they use 3 to 10%. I've never seen anyone modeling portfolios who picked less than 3% for their allocation. And so that's another area where you might find some guidance is in portfolio modeling. Some of the tools that are available in this area let you pick, I'm going to allocate 3% to gold. I'm going to allocate 15% to commodities, this much to stocks, that much to bonds, and then back test that portfolio as to how it would have performed in years past. So, and then there are people like Peter Schiff who they understand, in my opinion, they have a better understanding of where we are at in our current economic cycles and the economic environment that we're currently dealing with. And of course, that's high inflation, basically stagnation of the economy in a high inflation environment. It's exactly what we experienced back during the 70s. And of course, that's when gold and silver both increased in price by more than 20 times, 2,000%. Gold went from $35 an ounce to $850 an ounce, and silver went from under $2 an ounce to almost $50 an ounce. And so we're back in that same kind of environment currently. You'll find a few hardcore gold bugs who recommend an allocation as high as 35%. And again, they'll cite the current economic factors: inflation, overvalued stock markets, bond markets collapsing, heightened geopolitical tensions. They'll point at those kind of factors when they recommend an allocation this high. Here at Satori Traders, myself personally, essentially 100%. I mean, I've done everything I can do to get out of the banking system, out of fiat currencies. And when you start looking at, okay, now what do I do? How do I protect my wealth in the current environment? I don't know of any better alternatives than physical precious metals. So I'm not recommending, this is not appropriate by any means for most investors. I just don't know of any, for myself, any better investment than physical precious metals. And again, you'll have to decide what is appropriate for you personally, given your financial circumstances and your tolerance for risk. This slide, actually it's a PDF. This table they're showing, this is a model portfolio, like I was referring to a minute ago, where they are allocating different amounts to GLD, which of course is an ETF. This is not physical gold, this is GLD. And of course, look at their, prove me wrong, they're using 2%. I said none of the models use less than 3%, but what do I know? Anyway, in this model, they're showing 4 different allocations to gold, and then how that portfolio performed over the period. If we back up a little bit, 2005 to 2019, and of course that includes the 2008, the Great Financial Crisis, GFC. You know, people have to give names to everything, and so GFC kind of amuses me. But anyway, during that time period, with these allocations to GLD, you can see that the annualized return increased with a greater allocation to gold. Cumulative return increased, and then maximum drawdown, the maximum amount of money that you would not necessarily lose, but on paper lose in your portfolio. And so that maximum drawdown was decreased with a larger allocation to gold. And so anyway, this is just an example of a portfolio model where they're allocating some percentage to gold. Let's keep rolling here. So finding a reputable Gold IRA company, and that's step 2 in our 4-step Gold IRA plan. So starts by building a list of candidate companies. And if you spend some time doing research on the internet, you know, poke around, you can search on best Gold IRA company, that kind of search phrase. You'll find that there are just a few. It's a handful of companies that get repeatedly recommended. Just over and over, you see the same handful of companies being recommended as being the best. I will show you 3 here in a moment. So that's the first step. Build your candidate list, and then process of elimination. You know, basically you start crossing the candidates off the list as you research the companies and find whether they're really appropriate for you or not. Once you've done that, you're down to 1 or 2, maybe 3 candidate companies, and then you can reach out and talk to a company representative, see if you have a rapport with that individual. You'll get a feel for the company based on the kind of interaction that you have with their representatives. And then the next step, of course, is picking the company that you're most comfortable with. Based on my research, I've arrived at this list of 3 companies. These, in my opinion, are the best Gold IRA companies to work with. Top of the list by far is Augusta Precious Metals. The only downside to Augusta that I'm aware of is that they have a high minimum investment amount. It's $50,000. And so if you're not planning to invest $50,000 into a Gold IRA, Augusta is not even an option. But if you're planning to invest $50,000 or more, I'd suggest that you definitely want to have Augusta on your list of candidates and do some research. Do your due diligence on Augusta. Goldco, their minimum investment is $25,000, and then Birch, their minimum is $10,000. And so that's my list of the top three, and they're in order by their level of required minimum investment. Here are some other factors you can use to trim your list of candidate companies. Just because there are so many companies to choose from, I require, and I suggest that you do likewise, that they've been in business for at least 10 years. You know, fly-by-night companies don't last 10 years. You know, they're gone 2 years, 3 years. They declare bankruptcy, they go out of business, they just disappear and never heard from again. Anyway, a company that has lasted 10 years or more has demonstrated that they are likely to be around for a long time into the future. So my suggestion is don't work with any companies that haven't been around for 10 years or more. AAA rating on the BBB, Better Business Bureau, of course, and then responsive to customer reviews and customer complaints. So if you go to the BBB website, you can search on the company's name, and you'll find both customer reviews and customer complaints. And of course, the BBB shows you what the company's rating is, how long they've been in business. And so you can determine all three of these factors simply by going to the BBB website. And I suggest that you do that. The BBB requires that a company responds to customer complaints. For a company to maintain their AAA rating, they have to respond to customer complaints. And so you'll see on the BBB website whether a company is responsive or not. And of course, they won't have a AAA. They won't have a AAA rating if they're not responsive. And so again, I highly recommend that you stick with companies that have a AAA rating. This is what I was talking about a few minutes ago. You can trim your candidate list based on the minimum required investment. Again, 50,000 for Augusta, 25 for Goldco, and 10 for Birch. I'm only aware of one company that has a minimum investment of less than $10,000, and that company is Fidelity Investments, and their minimum is $2,500. And so it's a very low starting point. The downside with Fidelity is that it is a huge company. And if you reach out and talk to them about a Gold IRA, it's quite likely that they are going to steer you towards other products that they don't really want to help you invest in a Gold IRA account. I could be wrong. You may find that your experience with Fidelity is 180 degrees opposite of what I just suggested. But the only way to find out is to reach out to them and see what you find. So if you go to their website, you'll have a very hard time finding any information about their Gold IRA accounts, but it's there if you dig. So let's continue talking about, this is step 2 of our 4-step Gold IRA plan, trimming the list. This is the point where we reach out and talk to human being to human being, the company representatives at the Gold IRA companies. And so we want to see, do they treat us in a professional and courteous manner? Important. Do they try to pressure us into making a decision? And that will quickly be obvious. You know, do you get the sense that they care about you as an individual, or are they simply trying to make a sale? And of course, as I've said, there are lots of Gold IRA companies don't don't deal with a company who's trying to use high pressure sales tactics on you. There's simply no reason to tolerate that kind of behavior. Thank them politely for their time, get off the phone, cross that company off the list, and move to your next candidate company. So pay attention to whether they're using pressure tactics or fear tactics. Some salespeople, they'll try to, oh my God, inflation, stock market's going to collapse. Those are fear tactics with the objective of getting you to make a decision when you might not otherwise make a decision. And so if you sense any pressure from the salesperson, again, thank them for their time, get off the phone, cross that company off your list. Then almost certainly you'll have questions at this point. And so when you're speaking with these representatives, ask them your questions, listen to their answers, see if they answer your question thoroughly. Are they trying to not answer your question? After they've adequately answered your question, do they ask you if you have any other questions? Or do they basically, you want to find, are they making sure that you understood the answer, that you are now comfortable with whatever your question or concern was? Did they answer the question? Did they alleviate your concern? And so when you reach out and start talking to these representatives, you'll get a good feel for the character of the company based on interacting with the representative. You have several options for funding a Gold IRA account. The easiest is a rollover, and this is where you roll funds from your existing retirement account into the Gold IRA account. The funds are transferred by wire from one account custodian to the other account custodian. You never touch the money. The transaction happens quickly, and importantly, you never trigger the 60-day rule at the IRS. And so there's zero risk of having any taxes or early withdrawal penalties assessed if you do a rollover of funds. Now, the second option is to transfer funds, and this is where you take a withdrawal from your existing retirement account. You get a check or a wire into your bank account. You take possession of that money, and that qualifies as a withdrawal. And it's important to understand that. And so now you've triggered the 60-day rule with the IRS. You have 60 days to complete the transfer. You've got to put that withdrawn money into a new tax-advantaged retirement account, investment account, or the IRS will assess income taxes and early withdrawal penalties. And so again, much easier and safer just to do a rollover so you don't trigger that 60-day rule. Then the third option is depositing new funds. You can take money out of your current income and deposit that into the Gold IRA account. And then when you prepare your taxes, you'll declare that money as an IRA contribution. Now, of course, in 2024, you're limited. The maximum amount you can contribute to an IRA is $7,000. And so now we're back to the minimum investment amount that each of the Gold IRA companies has. So if all you can deposit is $7,000 and a company's minimum investment is $10,000, well, that doesn't work. And in that scenario, your only option that I'm aware of would be Fidelity Investments, because they can accommodate that $7,000 investment. And of course, if you're 50 years old or older, that maximum contribution is $8,000 in 2024, and it goes up every year. So then this is the most important step. It's which products do you hold in your Gold IRA account? The four precious metals that are allowed are gold, silver, platinum, and palladium. You can hold those metals in bars or coins. Either way is fine. Another option is proof coins, special edition coins, limited edition coins. These are bad investment. There's almost no scenario where these are a good investment, and so stay away from them. And as I mentioned at the start of the video, this is where many gold IRA investors make a huge mistake. They let a salesman push them into these kind of products, and then for whatever reason, they end up selling these products and experience a 30% loss, a 40% loss, anyway, a significant loss of their retirement funds when they discover that these coins, these special proof coins, special edition coins, coins in fancy boxes, coins with certificates of authenticity, they just aren't worth what the salesman said they are. And the tactics that the salespeople will use when they try to pressure you into these coins is that there's higher investment demand for these kind of coins. It'll be easier to sell them when it comes time, and neither of those are true. The fact is that knowledgeable precious metals investors have zero interest in these kind of coins because they're simply unwilling to pay a premium for fancy coins. You know, gold is gold, silver is silver. It doesn't matter whether we're talking about a scratched up gold Krugerrand or a fancy proof coin that's sitting in a fancy box. You know, it's just gold is gold. 1 ounce of scratched up and dented gold is just as valuable as a shiny proof ounce of gold. They have the same value. Don't get fooled by some salesman who tries to tell you something different. If you spend some time on the BBB website looking at customer complaints, you'll find that often this is what they are complaining about. They may not understand that this is what they're complaining about. What they're saying is that they lost 30%, they lost 40% when they sold their investment in precious metals. Underlying that loss is the fact that they let a salesman talk them into buying these fancy coins. And so anyway, don't make this mistake. Stick with, basically, it's bullion. You want bullion bars and bullion coins. And then a simple rule is buy the most metal for the least amount of money. And so if a 1 ounce gold bar is less expensive than a 1 ounce gold coin, buy the bar. If a 1 ounce gold Krugerrand is less expensive than a 1 ounce US American Eagle, buy the Krugerrand. And again, gold is gold. It simply doesn't matter. American Eagle, South African Krugerrand, it's an ounce of gold. So whichever one is less expensive, that's the one you want to buy. So most metal for the least amount of money. And I could have just, I'd do a 45-second video and tell you that, and then we could be done. But just want to emphasize most metal for the least amount of money. And then another mistake to avoid is fractional ounce bars and coins. And so, you know, 1 ounce bars, 1 ounce coins, that's the sweet spot. That's where you want to be for the most part. There are smaller coins available. You can buy 1/2 ounce coins, 1/4 ounce coins, 1/10 ounce coins. But you'll pay a larger premium for those fractional ounce coins. And so if you can, stay away from those fractional ounce coins, stick with the 1 ounce bars and coins. This is a question that comes up quite frequently when people are thinking about opening a Gold IRA account is this, do I want a Gold IRA or do I want physical gold? Well, they're really the same thing. In a gold IRA, you will be holding physical gold. Actually, the custodian is going to hold it in your name, but it's physical gold that you'll be invested in. And the alternative is physical gold that you would store in a safe location. There are vaulting services that will store your gold for you. And that's what I suggest as the best alternative for storing your physical precious metals. Anyway, when people ask this question, in my mind, what they are really asking is, what type of money will I use or should I use to purchase my physical precious metals? If you're buying physical precious metals to hold, you're going to possess them personally. You're going to have easy access to those precious metals, whether they're buried in your garden, you've got them in your safe with your guns, or you've got them in a vaulting service. You're going to use after-tax income. You're going to pay taxes on your income and then use that money to purchase physical precious metals, versus in a gold IRA, you will be using your tax-advantaged money to purchase physical precious metals. And that's a key point to understand. The only way to purchase physical precious metals using your tax-advantaged money is with a gold IRA account. There are no alternatives that let you do that. Now, some people might argue that, well, I can buy GLD, the gold ETF, or maybe one of the gold trusts, but I would point out that that is not physical gold. You are not in possession of physical gold when you buy GLD or one of the trusts. What you have is exposure to physical gold. It is a derivative. It is a paper product that is representative of physical gold. You will never take possession of physical gold through one of those vehicles. If you dig into the rules for exchanging your shares of GLD, for example, into physical gold, the threshold is incredibly high. I think with GLD, it's a 400-ounce bar. And so unless you're planning to take possession of 400 ounces of physical gold, you'll never trade your GLD shares for physical gold. And so I believe that is all I have to share with you in this video. In the description below the video, you'll find a link to Augusta Precious Metals. Again, if you're planning to invest $50,000 or more into a gold IRA account, that's my first choice. I suggest that you reach out, make contact with Augusta, and just start talking to them. They won't use high-pressure sales techniques. They will work with you for as long as it takes until you arrive at the decision, does a gold IRA account make sense for you personally, given your financial circumstances and your tolerance for risk. And so anyway, that's all I've got in this video, and I will talk to you soon. Let me stop sharing and end this video. See you, folks.